The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you.
Welcome to Stocktake. My name's Gaurav Sodhi. Joining me today is founder, editor. What else did you do?
Round dog's body.
Yeah. Fun guy.
The only person wearing a shirt.
On most. In fact, I don't think I've ever seen you in anything but one of your trademark shirts, John.
Is that right?
Yeah.
I can change it now if you want.
No, that's okay.
There's a video. We should remember
that. Nick is also here. Good day, Nick.
Hi, Gaurav. Hi, John.
Now, there are two other actors behind the scenes. One is famously Nick's filing cabinet, which has not made an appearance for a little while. But someone who has been missing, and he's back now, is our producer, Steph. So, hi, Steph. For those who don't know,
Steph.
John's the founder of the business. Nick and I are analysts. We do a lot of the hard work, but the person who actually runs the show is Steph. So if you have complaints or big, grand strategy ideas, that's the boss right there. Now, gentlemen, John, I loved an article that you wrote last week about Appen. It's a stock that we've discussed in the past, we've covered in the past, and I liked it because it neatly summarizes and displays how right we've been on it for a long time. And it was a difficult stock for us for a while because it just kept on going up when we were relentlessly negative on it. And coming back to the stock as you did, without any hubris, but with an intellectual bent, with an analytical bent. I thought that was interesting. Tell us, first of all, why should we be interested in Appen now other than as fodder for a victory lap? And then we'll move on to some of the things you've been looking at.
Well, I don't think there's any reason for a victory lap here because in reality, it wasn't a difficult thing to pick. I think what we were fighting internally was the relentless media coverage and the inclusion of Appen in the so-called WAXA stocks or WAX stocks, which was a notional technology index acronym for these high-quality businesses, which Appen quite obviously wasn't a high-quality business in the likes of Xero or Altium and other stocks that we've had on the buy list in the past. It was clearly different. And that fact was quite evident by the fact that they have 1 million contractors on their payroll. And any business that has 1 million contractors is probably not a tech stock in the manner of Xero or Altium or any of the other stocks. So there was this narrative bias that was running in the media and running in investors who I think were fairly inexperienced. And that's what we were fighting. So we only wrote one story on it, which was Graham, just describing why we thought it was a bad business. And now the stock has fallen 97%. And we wrote this up not to run a victory lap, but just to use it as a proxy for how these themes in stocks can push prices to ridiculous levels and to give people an indication of the warning signs when that starts to happen so they can avoid them in the future. So I think as a case study to avoid these narrative stocks, I think it's really useful. As a potential investment at this point, probably not so much.
Nick, well, you weren't with us during the whole wax madness, and you probably, you certainly weren't privy to what we were saying about Appen behind the scenes or our private thoughts to it. But did you have any? Were you as strongly negative on Appen, or were you more apathetic towards it? What were your views then? Have they changed now?
They haven't changed, and yes, I was pretty negative from the start. It was clear to me that this stock, as an investor early on, not to fall for the market story or the market narrative, and to always do your own work. And if you did your own work here, it was pretty clear this wasn't a high-quality technology business. They have 25% gross margins, which is the same as a grocery retailer.
Yep. Right. That is probably, that's all you need to look at. If you're only going to look at one thing, you can look at the gross margins and tell what kind of business this is.
Exactly right. It was pretty much an outsourced labour hire business for these large technology companies, particularly as they expanded into international markets. And it was a valuable service for them, but eventually the technology caught up. And artificial intelligence, as they talk about this great opportunity, could actually be the thorn of their Achilles heel, as actually does or replaces them and does the job that they were doing.
Yeah, I think, John, you explained this really beautifully. You said that the job that they were doing was, the completion of the job they're doing was actually assuring their own irrelevance.
Yeah, that's right. I mean, that was actually Nick's quote when I spoke to him about Appen, and that was his line, which I did attribute, although I wish it was my own. But that's essentially the truth, I think, and that's why they're pivoting with great speed to generative AI now, having dug a hole for themselves with their past business, and they're going towards generative AI full tilt. But I think it's an uphill battle for them. And the best way of looking at this stock now is as a kind of startup, as a new business.
Yep.
And it's not the kind of thing that you'd want to back.
What happens when a business makes those strategic tilts? Because we did see the company was generating legitimate, decent cash flow for a while there.
Yeah.
And it was reinvesting that cash flow in proper software businesses. Did it just buy the wrong businesses? Why did those investments not work out? Do we know why that was?
I didn't go into that in too much detail, but my guess would be that when your major clients are some of the richest companies on the planet who have a huge vested interest in making this work, no matter what company you buy, what price you pay, they are probably going to outcompete you in terms of the technology. And it might be that this works out for them, although I think it's a fairly low probability. But their competitors are their clients. So unless they can develop a particular niche that people like Google and Facebook and Apple really need to fill, then I think they're going to struggle. And if they do fill it in the short term, there's every incentive for their clients to develop that niche product or service internally anyway, and do what's already happened, which is to have their existing business undermined by their own clients.
Nick, what do you make of what Appen was doing, reinvesting cash flows into proper AI businesses? I think for me that tells you management's view of the existing business. Even if they never voiced that view, their actions spoke pretty loudly.
Yeah, I mean, it's the all or nothing bet, I guess, to completely transform the business. The other thing they did too was they bought more of themselves. They bought other competitors that pretty much did the exact same thing. And the thought there was to expand the crowd and, go from, 500,000 to 1 million people on their crowd. And that would get better data. And there was this whole narrative that they could upsell that better to clients and all the rest of it. But the expansion into AI, I think we've talked about it here before. This is going to be a really, really tough market, I think, over the next few years. And it reminds me a lot of the dot-com boom. I think the applications of artificial intelligence over the next decade are going to change the world. But there's going to be a lot of companies and a lot of venture capital that gets blown up in the meantime. And these acquisitions just might be some of that. It's an extremely crowded space.
Appen isn't alone in trying to pivot from one business to another. And I just wonder if pivoting is generally a dangerous thing to follow, or is the fall of Appen sort of specific to Appen? Any thoughts on that, John?
Well, there are times when, in a competitive marketplace, companies who can't exert any pricing control over that marketplace, don't dominate that market, are probably going to be forced to pivot at some stage. And that then you can see this, say, with ResMed when it got into consumables or started buying software businesses. I wouldn't call that a pivot. They were kind of add-ons and they make more sense. But when you're radically changing direction because your underlying business is failing, then it's a very, very difficult situation to surmount. To move from a successful business that is now failing to another successful business, it is like starting again. And most times that doesn't work out. And I think that the companies that do make it work are the ones that tend to be well-financed and have thought things through. And I'm not sure that Appen exhibits those kind of qualities. There's a smell of desperation about this, I think.
One company that has made that transition or is undergoing it is Aussie Broadband. I was thinking about Aussie Broadband while I was reading that article, John, and it struck me that Appen was never really open about the limitations of its own business model. And they were quietly acquiring these software businesses, and the narrative never really changed.
No.
And the transparent nature of Aussie Broadband is completely different. I mean, they've been pretty upfront that they are a reseller earning reseller margins, but they've also been very upfront that their strategy is then to build their own infrastructure and get customers on it to improve service levels and improve their margins. And they're doing that. So they've had a strategy from the very beginning. They've been upfront about it, and they're using financial success from one venture to launch another. And I think that's very different to sort of quietly pivoting strategy without being open about it.
Yeah. Well, with Aussie Broadband, if that strategy failed, they still got a business.
Yes.
And I don't think that's the case with that.
Yeah.
I mean, they've got a business, but it will be a declining business, I suspect.
Nick, do you have any examples of companies that can manage a pivot successfully?
I think the most successful one over the last decade has probably been Microsoft.
Yeah, you're right. Yeah.
But as John said, that was well financed. They didn't have a bad balance sheet, and the Windows business, though, wasn't actually declining, but it was probably maturing. Still was bringing in a lot of cash flow that they could reinvest and sort of could afford to take a gamble. Another one is pretty interesting is what's happened in the car market, where Tesla's come along and sort of overtaken that, particularly in electric vehicles. But the other companies haven't been willing to make the pivot, or at least been late to make the pivot. And it's always hard to do it because shareholders want different things. And without a founder, it's hard to take that leap of faith because you have to give up almost guaranteed existing cash flows for cash flows that may or may not come in the future. And that's a hard substitution to make. And it only seems to be made, I think, with companies that have a strong management team, but also usually a founder owner that's willing to just take the company there regardless of what the investor community thinks.
Yeah, I think culture plays an important part here. And I know we're entering nebulous territory here, but it is important territory. John, you've made the point a few times to me that Microsoft was dominated by Windows, not just financially, but culturally as well. And it was that cultural dominance of Windows that prevented them from entering mobile. There were forces inside Microsoft that were pushing to get onto mobile platforms and to create new products. But because that meant disrupting Windows, those voices were shut down. And the big change that new management made was to change the centrality of Windows inside the organization.
That's right. I mean, before the mobile phone, because really that was what caused the change.
Yep.
You know, in the external market was the move from the desktop to the mobile.
Yep.
And before that, everything that was done inside Microsoft was done to enhance the predominance of Windows. But once the desktop started breaking down and being replaced, not so much replaced, but mobile became the big growth area, that was an open platform, and Microsoft was running a closed platform. And what it had to do was disassemble all of that cultural baggage that came with Windows and open itself up to being available on every platform. So the big shift for Microsoft Office products, which had always been available on Mac, but if you wanted to use, I don't know, PowerPoint on a Mac, you'd probably be waiting a year or 18 months after the latest version came out on Windows. But now they do every new version of every software product comes out on every platform.
Yep.
So that was a big shift away from this, everything built around Windows towards software products that are available everywhere on every platform. But that took just a massive cultural shift, probably one of the most successful cultural shifts, as Nick said.
Yep.
and that was only made possible by Nadella being replacing Steve Ballmer, who was just Windows centric to his very core.
The other one I was thinking of, before Microsoft, IBM made that big change. You know, they were market leaders in mainframe software and switched to sort of business services. But again, people were bought in specifically for that change. It was a very deliberate pivot from the business, and it took time. It was a hard change to make. So, is there any hope for Appen? Is this a bombed out situation that might improve? And what are the signs of improvement you're looking for, if you're looking for any?
I'm probably not looking as closely as maybe I should, but no, it seems very bombed out to me. I think they have got new management. I'm not sure exactly where the balance sheet sits, but usually I want to see a few things in a turnaround. I want to see a clean balance sheet, so there's no massive risk of dilution, a new management team, an attractive end market, growth in your end market, and usually the chance to improve your margins. And I'm really not sure if it ticks a lot of those boxes. And it just seems to me, as John sort of said, it's practically a startup. That's a listed startup that's almost had to it's going to have to recreate itself, and backing that other thinks, a hard task.
Yeah, I've also got a checklist for things I look for in turnarounds. The most recent one actually worked out really well has been Karoon Energy, which is done fantastic for us. So I think it's a 2.5 bagger or something like that. But that was actually there was not a play on oil prices. It was not a macro call. That was a turnaround. And Nick, your list is pretty much the same as my list. You want to see it. You need to see a change in management. You see the balance sheet cleaned up. And if that means raising equity, then let other shareholders bear that cost, and you come in as a new shareholder with a fresh balance sheet. That's fine. I also like to see board changes as well. I think boards get off way too easy sometimes, and management becomes a scapegoat for poor decisions made by boards. Rio Tinto, I think, is a classic example. They went bonkers in the early mid-2000s with the China boom, made one mistake after the other, then blame management when it was clearly board-directed malinvestment. And all those things need to happen. And I don't think, for me, that's certainly not there. And you're right, I didn't have that on my list, Nick, but the attractive business, something to actually follow, something to pursue, or to grow into is really important. I think that's probably the missing piece for Appen. So not on the watch list. I don't think for any of us. John, are you?
No, not interested.
Yeah.
There's very little inside ownership. If there was any sign that there was going to be any hope for this business, then I think insiders would be buying, and they're not in any substantial quantities anyway.
Yeah. And the greatest lesson for me anyway is actually a lesson I learned a long time ago, but one that haunts me really is this idea about following market narrative and trying to determine real economic narrative. And I think that's such a nuanced, hard thing to do. When the market story is raging, it's hard not to fall for it. But as you say, Nick, you've got to do your own work and come up with the real story. And that's an investigative task rather than, I think, a investing task, really.
Yep. The media aren't going to help you out. They're going to carry the narrative.
That's right. That's what makes it hard, because you hear that story everywhere.
And it makes it harder when it's reinforced by the share price as well. Sometimes.
Right.
Yeah. I think that's right. To be a good investor, you have to be willing to look the fool for a long time. And we've all been there. Okay, Nick. You've been looking at a South Korean business, which I think when you first popped up and said, I've got an idea, none of us expected you to utter the words Coupang. I had no idea what you're talking about. Sounds like a ramen dish to me, and just reminds me.
Ramen is Japanese, by the way.
I know that. It still sounds like a ramen dish. Well, you can open up a ramen menu and see Coupang on that, I'm sure. I have. Maybe I have. I don't know. Tell us about this business. First of all, how did you... I'm always fascinated by this, Nick. I I think this is one of your great superpowers, is how the heck do you find these things when your universe is so vast? One day we're going to have a conversation about international investing, because I find it completely overwhelming, and I'd opened up an international account and I've now just closed it because I can't cope with that level of choice and I'm finding it difficult. But look, we'll save that for another day, because that's another conversation, one that probably needs a couch. Let's talk about how you came to Coupang, first of all.
Yeah, I think it sort of follows a similar pattern, and that's looking at other businesses in the same industry and using that base of knowledge and then taking it to other countries. So one example of that is, we've covered Rightmove, which is, it doesn't take you that long to get up to speed once you know REA.
Yep.
And Coupang's another example of that. So Coupang is the South Korean Amazon, or the Amazon of South Korea. It doesn't have the cloud services business, but it's essentially the e-commerce arm of Amazon, or similar to the e-commerce arm of Amazon. I first read about the business when it was IPOing in 2021. And at the time, it was unprofitable, was growing very quickly like a lot of these businesses, and the valuation was $80 billion after the first day of trade.
2021, that would have been the perfect time to IPO a stock like this.
Yeah, exactly. And I thought, this is really interesting. They were making all the same moves as Amazon did early on, or maybe probably early 2000s Amazon, and seemed to be winning a lot of market share. The financials, however, just didn't stack up whatsoever. They were burning a couple of $1 billion a year. Venture capital funded, or a lot of those investors were selling at the IPO, all the rest of it. And then, so I put on the watch list. You never know, I guess. And 2 years later, it's fallen 60%. So the valuation's now $30 billion. But the company has turned around remarkably financially. So it was losing close to $1 billion in cash flows. It's now made $1 billion in cash flow over the last 12 months.
Okay, incredible.
And it sort of
and nobody seems to have noticed.
Yeah, that's right. And it sort of fits that basket. If you burn enough of your investors, even if the operations turn around, it takes a while for the market to notice or to feel comfortable coming back to it.
Yep.
And this is also made a little bit easier or harder, however you look at it, by the fact that it's a South Korean business rather than an American business, where it's listed. So yeah, that's essentially how I found it.
So it's South Korea's Amazon. Now, that cash flow turnaround, that's remarkable. Just give us a high-level summary of how that happened. How did they do that?
So some of it's efficiency. So they have this massive logistics footprint, and they invested quite heavily in the years leading up to the IPO in that infrastructure. But as pandemic sales increased and as their own sales increased, the capacity of that of those facilities came down. So instead of running them at 60% for the growth they expected, they're now running at probably 80 or 90%. So that just helps on the margin side there. They also were making a lot of other bets. So investments in like delivering food like Uber Eats, a payment service, just a lot of moonshots, and they've really wound those back, I should say. But it's mainly just been discipline, and it's been driven by the top. So the founder, Bo Kim, he owns, I think, 10 to 12% of the business. And he's seen his stake go from, I think, $10 billion to $3 billion, and thought, well, the market's crying out for a profitable business, and we're going to show them we can do it. And so far they have. And I think the targets they've set out are for EBITDA to double from here. So they're about 5% EBITDA margin, which, if you actually look at Amazon's e-commerce business, is pretty good. And that's roughly what Amazon do in North America, or in a really good year. And they think they can get that to 10% over the next few years, which is the main sort of part of our thesis.
I love that idea of looking for one success and trying to replicate it elsewhere. I mean, just listening to you talk about Coupang, Mercado Libre in South America comes to mind. India has Flipkart. Both of those things have seen what's happened in Amazon and trying to replicate them at a local level, twisting things a little bit in their favor because they understand the local market a lot better. Is that why it works? Why that strategy works in international investing specifically, but finding something that works and going off into a different market? Or is there another reason you can think of that's such a nice idea?
I think you could be careful with just using that strategy because otherwise, like, for example, Mercado Libre, you just go, oh, this is the Amazon of Brazil, Mexico, and Argentina.
Comes a shortcut.
Let's just invest.
Yep.
Whereas Coupang was actually displaying a lot of things that I thought were quite unique compared to some of the copycats.
Right.
For starters, they've got 22 or 25% market share, which is quite impressive. But also, South Korea is probably the perfect country for e-commerce. It is e-commerce utopia. It's 1/8 the size of New South Wales, 50 million people, 25 million in Seoul. 70% of the South Korean population live within 10 minutes of a Coupang delivery distribution center. So there's a lot of things that I guess aligned that I thought, well, if you can increase, that gave me confidence that they could increase their margins. Whereas some of those other businesses, it's harder to see currently.
No, I think in Flipkart in particular, but they've been fighting big bloody battles with Amazon and other American businesses and Chinese businesses trying to come in and grab market share. I wonder what happens once those battles are fought, whether you might see similar improvements. But just quickly on South Korea, John, I think you've got some South Korean mates, don't you, who we hear about all the time?
Well, it just so happens that my favourite local cafe is staffed primarily by Koreans and a couple of Indonesians in the kitchen. So naturally, that was my first place to go to for research. I'm quite fascinated by Korea anyway. It's incredible. It's an incredible country. The industrialization of Korea is probably one of the most astounding stories in the history of economics, I think. China's done it on a bigger scale, but hasn't got anywhere near as far as Korea. It's an astonishing story. It's also astonishing that the generation of people in their 20s in my local cafe appear not to understand how remarkable Korea's story is. But boy, do they love Coupang. When I asked them about it, first of all, they were shocked that I would even know what the company was. And when I asked them about the service, they just ranted and raved about it. And everybody, their generation, swears by it. You can order stuff at 5 to 11 at night and it'll be on your doorstep by 7 a.m. the next day.
I can't even imagine. I can't even conceive that is so remarkable.
It is. It's incredible. But Nick's right. The density of the population really is the perfect country for a logistics business. Because the population, it's 50 million people, so it's a reasonably sized country, but the density of it is incredible. And I think about, like Taiwan, the country they're expanding into, half of it is, I wouldn't say uninhabitable or uninhabited, but it's fairly sparsely populated. So even when you look at a map of Korea or Taiwan, you have to sort of cut out a quarter to a third of the geography, which is reserved for national parks, or it's just so hilly and it's uninhabitable. So these are just ideal circumstances for a logistics business, far better than the US in many respects.
Now, Nick, Amazon is, as we know, a tremendous success story, but I think it's now well understood that the success has less to do with Prime and more to do with the cloud business. Is Prime standalone? Is that a high quality business that one should try to replicate?
Yes, it is, and other people are. So Coupang has got the exact same offer, which is Rocket Wow.
Wow, okay, right.
Rocket Wow is the name, yeah. And
it sounds very Korean, I got to say. So it sounds like something you'd see.
Very similar perks. There's a small video service with it, but the main perk is the free delivery. Just on that, 99% of products delivered by Coupang arrive within 24 hours. They're the largest e-commerce grocery retailer in Korea. And so it just shows you once once you get these delivery speeds down to a matter of hours, it really expands the actual selection, the range of products you can deliver to your customers. And I think this is actually going to be a story that the market starts talking about with Amazon, particularly in the US, where they are getting the delivery service down to a few hours. But Coupang sort of beaten to it in South Korea. Now the model is pretty much the quickest e-commerce delivery service in the world.
Astonishing.
It's absolutely astonishing.
Just when I had resolved to swear off international stocks, you sucked me back in with a cracking idea.
Well, we could hit you up with a few more stats that you might like. So in Australia, the US, the online sales were about 10% of overall retail sales. In Korea, depending on which stat you use, you'd know more about this, Nick, but it's anywhere between 20 and 40%.
Wow.
Yeah, it's astonishing how quickly that's growing. That's growing quite rapidly too. So there's still a long way to go, I think, for this business.
Yeah, and I think sometimes that's used as maybe not the complete bear case, but somewhat of a negative point towards Coupang that Korea is has a higher e-commerce penetration than the rest of the world, so therefore it's got less growth runway less. But there's so many other areas where this business is just getting started. So at Amazon at the moment, 60% of the volume of product are third-party products. And what that means is essentially Amazon's marketplace and fulfillment services are selling products from other businesses rather than taking the inventory on themselves. At Coupang, they're only just getting started. It's 4% of volumes. And this is where you make really high margin revenue because you're not just now a retailer, you're selling the ads, you're selling the fulfillment and the marketplace space. Coupang only takes 3 to 15% commission, whereas Amazon takes up to 45% commission. And I think it's so low just to get volumes onto that platform and to start growing it. And once it does, you should really see those margins start to expand as well. So there's a lot of internal things that I think Coupang can do rather than just the overall e-commerce penetration to grow the business.
It is quite competitive though, Nick. There are a lot of people trying to do the same thing, but this does seem to have a kind of winner-take-all feel to it. Once you get the distribution down to a few hours, then I don't see how anybody can really beat that. And it does tend to be a winner-take-all market. Yeah,
absolutely. And one of the things I think you mentioned before was dawn delivery, which is pretty unique to Coupang, where you can order a product before midnight and it's at your door before 7 a.m., which, again, this highlights how much they care about the customer. In Korea, kids and families, sometimes they're not going to bed till midnight. Kids sometimes aren't going to bed till 10 o'clock.
Wow.
It's amazing. They work. Kids over there can work 14-hour days with school, after-school activities, private tutors.
They work them to the bone. That's why there's a lot of Koreans in Port Melbourne. The education system has just turned them off the country entirely.
Yeah, I would do the same. Actually, that's insane. Wow.
Yeah,
that's amazing. Look at us. We're business, philosophy, everything, all wrapped up together.
Hey, I've got one more question for Nick.
Yeah.
Why would we buy this through the US rather than the Kospi?
It only trades on the US.
Really?
It's only listed on...
Oh, really?
Yeah, it's only listed... It's listed, on the New York Stock Exchange.
Oh, New York Stock Exchange.
Yeah, and that's the only place you can buy shares. I think the reason why is... So, Bo Kim, who's the founder, he's a South Korean national, but a Harvard graduate and spent a lot of time in America and raised a lot of the venture capital dollars that have funded this business from there. And that's another sort of unique point. A lot of the management team at Coupang are actually not Korean. So the international executives that are bringing a sort of a different business philosophy than perhaps is apparent in Korea, which is another distinguishing point.
I did once have a chat with Chow Ma, who used to be at Cooper's. And we were talking about Korean stocks. At the time, just for interest, I was looking at a company called Kakao. Have you ever had a look at that, Nick?
Briefly.
Yeah, it's like the Korean version of WeChat, Chinese. So it's an app for everything. And she said, this is just a warning note for our members now. She said, whenever I mention Korean stocks, my team just says, don't ever go near them. You never make any money out of them. It's a burial ground for our stock picking. And she never explained why that was. Maybe it was just not especially lucky. But it's good to hear that they're bringing in external management to give them a different perspective, because the chaebols do sort of run the country, and that was how the country industrialized. And you do wonder how that affects businesses that are trying to grow into that new environment and bump up against these bigger interests. They're very well politically connected.
Right, Nick and John, there are probably II subscribers and listeners wondering why they should give us stuff about Coupang at all if they're only interested in investing in ASX stocks. I think that's a legitimate question and one we ought to answer. In fact, someone asked us a very similar question. Nick, you got the question. Do you want to just summarize what it is, and let's have a go at answering it?
Oh, you're going to have to...
You don't have to read it out. Just give us a brief account of what it is.
What was it again?
let me
Ferrari.
do it. Why don't I do it? Okay.
Yeah.
Well, under a cracking article you wrote on Ferrari, someone asked the question, why should I care, basically? So I thought it was quite a thoughtful question, actually. He said, I'm only interested in investing in ASX stocks. Why should I spend my time reading about a international stock that's not even on the buy list? And I think we ought to provide an answer to that question. So let's have a chat about it. Nick, why?
Well, I think as an investor, the best thing you can do is always learn. And while maybe Ferrari's the wrong business to have a look at in terms of what you can bring to the Australian market, because we don't have any sort of luxury goods companies or the rest of it, but a company like Ferguson that competes directly with Reece, I think that's well worth your time reading about. A company like Rightmove in the UK that has a very similar business model to REA, and picking up on what they're doing and what REA is doing and what they're doing different can create some real insights that a lot of Australian investors actually don't think about. Even a business we've sort of discussed already, like Amazon. It hasn't made its mark yet on retailers like JB Hi-Fi or Harvey Norman in Australia. But I think over the next decade, and I've recently done a tour of their distribution facility out at Western Sydney, which is just remarkable and should improve the delivery times of their marketplace. Just looking at that business and understanding what's happening overseas and how that could eventually happen in Australia and who that could disrupt, I think it's a very worthwhile thing, even if you're not going to invest your money in those particular companies.
I like it. John?
Well, firstly, let me say that there is no obligation on our members to read everything we publish.
Right.
And we are aware of this psychological bias where you feel as though you're paying for something and therefore you should read everything. That is not a requirement. It's a misplaced kind of thinking. You read what you feel would deliver the most value. And that might not be stuff that's internationally focused. I think members generally should read as much as they can about international businesses for a number of reasons, even if they don't invest internationally. And the first thing is the point that really Nick made, that when you read about international businesses, it just frames the Australian equivalents in so much more light. And Rightmove and REA is just the perfect comparison. Even when you look at, say, Amazon and Coupang, there is no Australian equivalent, but understanding these often global business models helps you understand things in a deeper way about the businesses in Australia. And I think any reading, especially the kind of research that we do, where we spend a lot of time on the business model, if you can read about some of the best business models in the world, which you can now with the stuff that Nick's done on Amazon and Meta and Google, we got Apple to come, Nick, but these are some of the best businesses in the world. You can see that from the way that they've been flying for the past 6 or 7 months in their share prices. It's the only part of the market where people have any interest, any excitement. And then you look at what's available in Australia. you get it's like an independent verification on whether what you're buying is as high quality as what you think. Because I think in many cases it's really not. So I think that comparative principle is really, really useful to establish, to give you a good grounding in the kind of stocks that you're buying in Australia. So that would be my first point. The second would be, this is the problem, the opportunity set, as fund managers like to say. We're not out there trying to scour for the cheapest, smallest little company that we can find. We really are looking for the best business models. And a stock like Ferrari, which I think the member comment was about Ferrari. Why should I bother reading about this? Well, because it gets you thinking about the brand. Ferrari is probably one of the leading brands in the world. Same with LVMH and the other stock that you compared it with there, Nick. That helps you understand a business like JB Hi-Fi, I think. You read about Ferrari and think about its positioning, and then you've got this mental model that you can then apply to something like Lovisa or JB Hi-Fi. It works in other areas of the market. So I think there's an education process there from learning about some of these really, really high quality businesses that you can apply locally. And you can see how much better some of these businesses are than what we've got locally. And I'm personally a big fan of diversifying your portfolio overseas. And I know there are dangers to that. I know there are disadvantages to it. But I think just reading this research will perhaps open members' minds a little bit who have only previously invested in ASX stocks. And generally that would be a good thing. But even if you don't act on that stuff, you will still have the benefits of learning from these really high quality businesses that Nick's reviewing.
Yeah, so I'm someone who doesn't invest overseas, but I find reading about international stocks not only interesting because, it is my profession, but I also find it incredibly useful. And Ferrari is the perfect example to demonstrate that usefulness, because where Ferrari came from, Ferrari was locked away in fiat, trading at 6 times earnings. Very few people thought that Ferrari was worth anything. Not that it wasn't worth anything, but no one thought that it would be worth what it is today. What is it, Nick? Like a $50 billion business or something? Yeah. And what it took was a couple of hedge fund managers, a couple of investors to poke around through fiat and say, hang on a second, you guys are holding Ferrari. Ferrari's not a car maker. Ferrari's a luxury good. And that insight, that Ferrari is not a car maker, Ferrari is a luxury good. Something that Nick, I think that's a quote from Nick's article.
Yeah, it is.
That is a brilliant insight. That is a $1 billion insight. This is why we do the job, is to uncover insights like that. And if you can read about those insights in other businesses, you're more likely to uncover them in the domestic market. And I think Lovisa, John brought up Lovisa. Lovisa is a great example of an insight that's come from looking at overseas stocks. I would never have bought Lovisa had I not read about Zara and Uniqlo and H&M.
Yeah.
Because I had read about fast fashion, I think it gave us as a team an edge. And I think we were very early in recognizing that Lovisa is not a jewelry store. It is a fast fashion business. Completely changed the frame we view Lovisa in, and led to, for me anyway, it's a incredibly profitable position for me personally. It's been a huge success for II to be involved with Lovisa, and it all came about from understanding an overseas business model and applying it in Australia. So I think it's incredibly valuable to read about different business models, and Ferrari is the perfect example. If you don't read another international stock, read Ferrari. That is a brilliant piece of insight that a handful of people globally came to. And I loved it.
Yeah.
I also think just in terms of general business principles, we talk a lot about the flywheel effect.
Yep.
And you only really see that in its purest form in Amazon. It operates elsewhere. Everybody claims they've got a flywheel.
Yep.
But unless you understand how... Unless you understand how that worked for Amazon,
yes,
which we missed, I personally missed.
I personally missed it too.
Yeah. And you're not really going to see it in its purest form. And then you have nothing to compare with what local managers are calling their flywheel effect. which probably isn't. In most cases, it's really not.
Yeah. I think the only thing I like to add is just a lot of Australian investors, and we've talked a lot about it, keep saying, I only invest domestically. I don't invest overseas.
Yeah.
But even a company like Labissa, you are actually investing overseas.
That's a good
You
point.
are. That's
Yes,
right.
That's right. Yeah.
James Hardy, you're investing overseas.
Resident, CSL,
Yeah.
Rio Tinto, BHP.
Yeah. And I think if you look at our index over the last 20 years, it's been heavily dominated by the banks and the big miners, which, a lot of their operations are still in Western Australia. I think over the next 20 years, it could look completely different, where a lot of the best performers are some of these offshore companies that just happen to be listed here. So I think it's always important that you pick up a pattern recognition and you're just devouring as much investment information that you can.
Yeah. Okay, I think we'll end that there. We've lost Gaurav, who seems to be banging away on his computer doing something and getting no sound signal. So I will say goodbye from him. And Nick, thank you very much for your input. And we will be back again in 2 weeks. See you then. Thanks.